The problem and the plan. Finding financial success when it seems all is hopeless. The alarming financial problem in Canada. The #1 fear of retirees is that they will run out of money. 66% of Canadians are unsatisfied with their pension plan performance, and a mere 30% feel they can rely on their employee savings plan. In reality, the majority of people have no idea what their actual retirement fund will be when that day comes. Many are falling further behind. A mere 38% of Canadians contributed to their pension last year. Their average savings rate was just $4,670. To make matters worse, 59% of men and 66% of women did not contribute anything at all. 61% cited a lack of cash as their reason for not saving. Credit card debt continues to rise. 68% of Canadians rely on credit cards to cover everyday expenses. 67% do not pay off their balances in full each month, racking up additional debt and interest charges. In the 12-year period from 1999 to 2011, Canadian debts rose from 110% of annual income to a staggering 153%. Unsecured debt for working Canadian couples reached a whopping $50,000. Without a solid plan to pay it off, debt is hard to get rid of. For example, making only the minimum payments on a $1,000 charge on the average credit card will take 22 years to pay off in full. Costs over $2,300 in interest. What does your debt really cost you? The solution, with a real-life example. A sound financial plan includes both debt reduction and wealth creation. According to a recent survey, 33% of Canadians have plans to focus on debt reduction. 22% plan to save more, and 23% intend to save and reduce debt. 3 components of a sound financial plan are: guard against uncertainty, grow investments, strategize retirement. Good debt has tremendous value. Bad debt is debt without value. Good debt works as a money machine by lowering the cost of debt, generating income, and adding value and/or opportunities to a financial portfolio. Money machine versus no debt. Would you rather have no debt and $400,000 in savings, or have $1 million in a money machine and $100,000 in debt? The right idea is to have more money generating income through interest. Which one would you prefer? Many falsely believe there is no hope for someone out of time. Those who are in their golden years may not have much time left to secure financial independence. However, there is hope. For example, a widow owned 3 duplexes that were not generating enough income for her to live on. Her son watched in agony as she struggled each day just to make ends meet. Her son sought out a trusted wealth manager to explore options. After a detailed analysis by this expert, a plan was carefully constructed that would indeed secure her financial position. The plan and the results. The son and his mother went to the bank and borrowed $800,000 against her 3 duplexes. She used the loan proceeds to purchase a lifetime annuity that provided an immediate income of $164,000. She now lives on $80,000 income per year after paying taxes, life insurance, and the interest on the loan, and her family will be taken care of when she passes away. Without all these tools in place, this would not be possible. There is always hope, and there are people who can help. Establish, save, and protect your financial future with Pension Planning Center.